Good evening. The Indian stock benchmarks ended in the deep red for the third straight trading session, with the NSE Nifty just managing to find a support at 50 DMA of 5,240. The index has critical support at 5,160, which is the 200 DMA, below which things could get even worse for the Indian equity markets. Investors continue to remain edgy due to doubt as to whether the union budget will revive GDP growth and cut fiscal deficit even as inflation remains stubbornly higher. There are also concerns about the timing and the quantum of the repo rate reduction by the RBI in the coming fiscal year, given the suppressed price pressures in fuel and fertilizers. Elevated crude oil prices are also cause for concern. The BSE Sensex was down by 193 points to close at 17,273, and the NSE Nifty was down by 61 points to close at 5,257. The mid-cap and the small-cap indices were down by approximately 1% each. The market bet was weak while the India Volatility Index was quite stable. The India VIX on the NSE was down by 0.7%. The undertone is cautious as investors are skeptical about the government's estimate on fiscal deficit and subsidies due to stiff opposition to unpopular measures like price hike in fuels and fertilizers. Also, the hike in excise duties and service tax is likely to boost prices of a whole host of products and services, putting upward pressure on inflation at a time when crude oil refuses to moderate. So it would be interesting to see what approach the RBI adopts on the interest rate at its policy meeting on April 17th. People have already scaled back their expectation of monetary easing from the RBI in light of concerns over sticky inflation, which is expected to increase in case fuel prices are hiked. The RBI may cut the repo rate by up to 50 to 75 bips in FY13 as against projections of 100 to 125 bips earlier. The government will levy an additional 10% tax on current duty on cigarettes of more than 65 millimeters. The tax will be added on ad valorem basis. Shares of Union Bank of India slumped over 5% after Moody's Investors Service downgraded by one notch the ratings for the India. Globally, Asian markets, which started off with positive bias, ended mixed today. Investors remained optimistic of the stability in the debt strike in Eurozone, and US economy continues to inspire confidence. The Nikkei index in Japan was up by 0.2%, South Korea's Kospi was up by 0.4%, while the Australia's S&P ASX 200 index was up by 0.34%. Hong Kong's Hang Seng index was down by approximately 1%. The China's Shanghai Composite Index rebounded to end at 0.3% higher. The US stock indices closed mostly lower on Friday following a disappointing reading on consumer sentiment. The Dow Jones index ended marginally lower by 0.2% and the Nasdaq index was almost unchanged while the S&P 500 index edged higher by 0.11%. The crude oil futures continued their recent rally to close above $107 per barrel in New York trading on Friday. In the currency market, the rupee rose against the US dollar for a second straight day on speculation that gold imports into India will drop after the government increased custom duty on the yellow metal. The Finance Minister Pranab Mukherjee doubled the custom duty on gold bars and coins to 4% and the excise duty on refined gold to 3%. European stock indices erased early gains to turn lower due to weakness in banks and miners. The Stoxx Europe 600 index was down by 0.4%. The CAC in France was down by 0.7%, while the DAX in Germany dropped by 0.6%, and the FTSE 100 shed 0.45%. Thank you. Wish you have a great evening ahead.